What's up, traders? I've been waiting months to do this video because Bitcoin has done something that it has not done since October of 2023, and that is a confirmed trend reversal to the bearish. Now, a lot of people might be questioning this, saying like, well, it goes up, it goes down, but we're just going to hodl because that's what's worked over the whole life of Bitcoin. But that's not entirely true. In fact, using this one simple signal has had dramatically improved results versus just purely hodling. And I'm going to prove it too. So if you look at using this signal over the course of Bitcoin's life, going all the way back to 2011, not the entire life, but 13 years, the results, the P&L, the capital in fiat that you would have relative to owning just a single Bitcoin is many multiples higher. But what does that mean actually in terms of how many Bitcoin you would now have at the end of this period? Well, at the end of this period, you would have almost 7 Bitcoin for every one that you would have if you just hodled. And it's very, very simple. There's no crazy moving indicators or anything like that. I'm going to show you exactly what this means, as well as dig into some of the examples for the skepticals people. So, what is the signal itself? Well, it's based around Ichimoku. And what you have is the price above the cloud at the same time that momentum or Chikao or the lagging span would be on the same side of the cloud as well. This would be a confirmed bullish trend. This is what we're looking at right now is January of 2023, really after the FTX debacle, which is back here. And that is what really triggered us off of the bottom. And we're going to show that going forward there. So that really triggered us into the current era that we were in. Now, sometimes price will come back to the cloud, but notice how our confirmation, our momentum, our lagging span was not on the bear side of the cloud. That keeps us in the trend and that keeps us in the position. We don't need to adjust in that point. Now, there are a couple of examples where we'll get a potential false signal, but if we follow our signal to the T, we'll get right back in with just a small miss bit of profit. And a lot of people get held up on that. And I don't blame them. I don't blame you because a lot of people just want to sit back and just hodl and do what Michael Saylor says and get just the results from just owning a single asset and constraining supply. But this can be done even better. And it's not just going back all the way through history. If we go back to just this current era, we'll call it, back to see February of 2020. This was right before COVID. COVID, we had that giant crash right there, which by the way, if you had followed, you would have gotten out as it crossed the cloud at the same time that your cow was crossing as well. And just a quick statistics from the point of 2020 that I'm talking about right here, the difference at first started out, well, with hodling winning, admittedly. But over time, the strategy worked better. Why? Because it helped avoid drawdowns. What does that look like actually on a Bitcoin ownership perspective? Granted, these are not with leverage. This is just pure position resizing. We wouldn't have quite twice as many Bitcoin since 2020 if we'd done this, but we would have at least 65% more by adjusting our position in and out as this goes along. And so if we went along, let's see how this plays out. So the first signal we get after the COVID crash was here back in May of 2020. And so the price goes up and continues up, and the yellow line here is going to represent us being in the trend. Note how price got on the bearish side of the cloud, but momentum did not, and thus we stayed in. As it goes along, we finally do get a exit signal here. And this is a false exit signal, at least in hindsight. And so what we're going to miss out on is we're going to miss out on a few percentage points that the hodlers will sit back and cheerfully say that, they made better than we did. But we're back into the trend as when the big movement comes up. And as it starts to top out in 2021, we're going to get two signals. One gets us out in May of 2021. There's a little that drawdown through the summer of 21. And then we will, once price and momentum crosses the cloud again in August, get back in. Not much of a difference there. It's almost just the same. So we basically avoided the pain of the summer of 2021 by being out of the market and waiting for it to give us confirmation that the trend was going to resume again. And then it goes onward, onward. And finally, we get the really big kicker. This is where the difference comes in. December of 2021, that big spike right there was the jobs report. That was where interest rates were going to be sensitive to what the Fed was doing and Bitcoin was going to be affected. But no one really wanted to listen at the time when that was happening. And now you're out. You're out at about 49,000 Bitcoin in 2021. There was another false signal in March, but you only gave up about 15% here. Meanwhile, all the hodlers were sitting there going down all the way to the tune of about 65%. Going all the way down, all the way down, all the way down to the FTX crash. And here we go, November, and boom, that has been avoided. Then in January of 2023, the signal re-enters, and here's where the real difference comes in. Selling at 49,000, taking a little 15% hit. Let's say we have about $42,000 worth of capital. We're able to buy back Bitcoin at $18,900. And so that is why at the end of the day, after the 2020 period, we're able to own more Bitcoin because we're able to buy it cheaper for the same amount of capital back there. And so as we come to the current day, the day that I want to talk about here, we have triggered that signal for the trend to reverse. Now, anything can happen, hashtag. And this is not financial advice. Do whatever you think is right for you. And if you want to challenge this, if you want to look at the data to see where I came up with, go through and validate it for yourself. Look through some of the instances where this triggered. I'll also be talking about this on my live stream on Friday at 4 p.m. Eastern. So be sure to check that out if you want to dig in or tell me that I'm wrong. But I'm going to leave you guys with this. If you go out, I'm going to get a lot of criticism from people on Twitter, Bitcoin Twitter, or Bitcoin social media. Here's the mantra from our favorite cheerleader: you don't sell your Bitcoin, which is really good for those with a vested interest, because if people don't sell, then supply remains constrained and it goes up. It's very good for them. But manage your finances wisely and take a little bit of effort into really understanding how these trends work. There's no reason that you have to take a 60, 70, 80% drawdown. You can just get back in once it confirms to go back up. So trade wisely and look for the video where I'll be talking about the difference between the classic Ichimoku settings and the improved crypto Ichimoku settings. They're not, very shortly. So see you guys in the next video.